Welcome to an episode of DeFi Dojo Podcast. We are up only, or have been up only for the past week. I mean, sort of. We're like on a bit of a pullback, like a 4.2% pullback. Funny numbers since yesterday, but nearly 90K. A bit of up only action. How you feeling?
Yeah, I mean, I try to stay pretty level-headed when things get super frothy, either like to the upside or the downside. But I gotta say, I've been enjoying it. I've been chart watching pretty aggressively the last few days, just kind of lapping it in. It's fun when you have. I have a lot of notifications on my phone, and for the past 6 months or something like that, it's been like whenever I get notifications, they tend to be bad. It's like, token down again and again and again. And now it's just kind of like fun every time BTC is breaking an all-time high, getting like a new notification about it or like some big pump. So I think it's been great. I think things are moving pretty quickly, which always makes me a little bit nervous. Like I'd like things to kind of be a bit more incremental. I don't want to have some sort of like blow off top. I do think that things are going to be pretty constructive for the next period. I'm pretty excited about that. I do think just looking at open interest levels, there's a good chance we do have kind of like a flushing that eventually is going to happen. People are getting longer and longer and longer, and that tends to be how this works. Is like people get more and more euphoric, more and more long, willing to pay higher and higher funding rates, and then we need to get a flush out, and everything gets reset. Say 10, 15, 20, even more percent. So, for those of you guys that are out there that are trading this thing aggressively, using lots of leverage, I would definitely, be on the more careful side with the high leverage. But in terms of being long the industry, being long crypto right now, it feels pretty great. How about you? What's your take on?
Do you follow open interest and funding rates? So I tend to use CoinGlass, but I'm having some troubles actually using CoinGlass in a meaningful way. So if I wanted to, for example, check out Bitcoin funding rates, let's do funding rate. Funding rate heat map might be interesting. Funding rate on Bitcoin, like it's saying 0.06. I wonder, this is 8 hour. Holy smoke. So people are really maybe going long here.
Yeah.
Open interest weighted Bitcoin price. What is the funding rate? So that would be open interest weighted is funding rate. Okay. So 0.05, 8 hour. That's roughly, it's ballpark 50% APR to short at single X leverage, which is wild.
Yeah. And most people are not single X leverage. Most people are I don't know. It'd be interesting to know what the average leverage people use is, but 5X could be more, right?
That's wild.
This is the kind of thing that makes me nervous. No, this is just the kind of thing that makes me nervous, right? Is seeing all this kind of open interest building up on the long side. It just kind of sets up the classic phenomenon which we always see is so much froth, so much excitement, and then the flush out caused by a few major kind of whales selling or some slight bad news or just something, right? And so I'm kind of maybe it's just I've been around the block too many times. I'm just kind of waiting for that to happen, needing that kind of reset essentially.
Yeah, I think maybe we said it last week, but it's whenever things fly up, it feels like the moment everyone starts talking about LAMP, there was Autism Capital said something really funny, which was, the rule of a bull market is you just never look at Zillow, because once you start looking at Zillow, it's the beginning of the end. And I think that there wasn't people posting Zillow pictures, but it was the moment you feel hey, what could I do with this money? That feeling is typically the end of the run up. Now, there's going to be more run-ups, sure, but I do think we're going to see some bit of a correction. A bunch of them are going to be liquidated because they were over-leveraged. Maybe we see a really big correction, and we chop for a little bit before the next run. However, if we look at just historical price action here on this chart, I have so many tabs open. Here we go. You can see it when we get crazy bullish. This is a monthly chart, by the way. The months just go crazy. Let's go to a weekly, though, because it can really just be day after day after day of green. So 1, 2, this is weeks, sorry. So 1, 2, 3, 4, 5, just week after week after week. If we go daily, in the absolute crazy, what you call frothiness of the bull run, we can get, 45%. Now this is more than 40. This is 80% green, right? Then some, consolidation or whatever you want to call that. Then boom, blast off again. And this is probably 75% green days. So then you start getting less of it and then you peak. So I do think we're probably in this area here. I hope we are, but who am I to speculate? We have had some beautiful, super big green days lately. And if you get one red day, I think I'm fine with that. What is this? How many days is that we've had of greenness? 6 days. Almost a whole week of green candles. Love it.
I mean, it's literally just been since the election up only. Who knows how this candle closes today? I mean, could take another leg up. I agree. I think it's kind of healthy to have a little bit of a down day. Let everyone digest. Let people who want to take profit at these like high 80K levels take some profit. Like it seems healthy. And then it just feels like the industry as a whole has just got so much fresh energy and excitement going on. Something that I haven't seen in quite a while. I do think that regardless of how you look at things politically, people are, of course, going to get over their skis a little bit. Like the new administration is not going to change regulation in a day. They're not going to start approving ETFs left and right in a day. They're not going to give regulatory clarity on stable coins and token launches and everything. It'll take time. And so I do think that people will expect, bullishness, and it's going to probably be a bit of a slower grind, but we've already seen kind of the shift in momentum where it's now there's not all this regulatory headwinds, there's tailwinds, but we just don't know how long it's going to take for those to start being enacted essentially.
Yes, exactly. Well, people want to front run that though, because they don't want to be the last one into the trade. So we have a lot of front running, but also we have a lot of speculative front running. We have a lot of, maybe illogical front running. People are just oh, Trump's in office, bullish. I don't know why it's bullish. I don't really know the details of the bullishness. I just know Trump, he's got his NFT collection. He's got World Liberty Financial. He was kind of a bully on Powell last time he was in office. That seemed to be really good for interest rates. We'll see if he can do it again. Things like that. Maybe I'm oversimplifying it. Maybe we're overcomplicating it. I'm just here for the price action and I'm excited for it. Does this mean, last thing we'll say on price action, because neither of us are TA guys, but does this mean that this thing here was a bull flag? That was the big argument between, a lot of people were saying, no, this is not a bull flag. And I don't know. Is this validation? Only time will tell. Anyways, let's look at funding rates, because you mentioned that funding rates open interest may be a bit overheated right now, which means for those very rare few who are interested in things like delta neutrality or funding rate arbitrage, you can have a lot of fun. So if you're spot holding Bitcoin, actually right now on Bitcoin, you can probably get 20%. I think that's a reasonable yield. I'd even say 30%. I'd go as far as to say 30 if you were really savvy, but let's go 20% on your Bitcoin long. Let's just say you're hedging on, DYDX is busting too, but let's say you're hedging on Hyper Liquid with a 2x short. That's 45% APR, delta neutral. And this can go higher too. If you look at the past 2 days where you've really kind of exploded, I'm sure it's even higher. And really what you want is a nice average. Yeah, so 56%. That gives you a total delta neutral yield of around 50% APR, which is effectively getting 50% APR in stables. And I've mentioned this, that in a bull market, stablecoin plays or delta neutral plays can do incredibly well, between 40 to 100% APR relatively consistently. They're almost always based off of either two things, one, hyperinflationary emissions, because people just aren't selling emissions as fast during a bull market. So they have a time to even get a bit of a pump. And two, funding rates, which are just crazy high as everyone, scavenges to get in those long positions.
Well, and obviously this can take massive size. This is the trade that Athena is doing, right? They're very heavy into ETH, they're very heavy into BTC. This is the trade that they're doing. I think it means that, staked Athena stablecoin or Volcoin or whatever you want to call it is going to have some pretty juicy APRs next week. They'll probably continue to have some juicy APRs into the future, which opens up the door, of course, to some interesting leverage positions. We can get to that if we want to. But also on, non-majors, so non-BTC, it also means that there's even more opportunity, right? You need to manage these positions more if you're trying to run a delta neutral position on an altcoin, but they also tend to have even higher, funding rates. BTC at 100% over the last 2 days is pretty crazy to see. That probably won't go on forever. I think we will see, it come down into this, maybe, 25 to 40% range, depending on exactly how bullish the conditions are. But seeing 20 to 40% on an altcoin consistently, something that's got some bullish headwinds, something that's got a lot of excitement around it, something like Aave maybe, is not unexpected.
So we actually, I was looking at Compound because I believe Compound's going to launch a mantle market relatively soon, and they have a massive incentive program with Athena and Mantle. So that should be really fun. It should be a great place to borrow Athena for probably cheaper than you'll get anywhere else. So keep your eyes peeled for that. As far as I know, it's actually already launched, but it's not on the front end. So like the smart contracts are already deployed. If you are savvy enough, you could participate, and the front end's coming soon. So that's really exciting for those who want to play that Athena play. I think Pendle has Athena probably around, I imagine it went up over the past day. We can get Pendle here, staked Athena. Yeah, no, it's still around 45%. So staked Athena at 45%, fixed rate, fixed date. I would be surprised if this doesn't start to go up a little bit. Even the YT might be an interesting play because funding rates are going to go crazy, and we'll see Thursday what the next week's SUSDE rate is going to be. I think this week it's still in the 11%, but Thursday we'll get like the real big fundings, and I would imagine we're probably going to be around 15%, 15, potentially higher. So that'll be a lot of fun. I was going to mention Hyper Liquid. Go ahead.
The only thing to be careful with the staked Athena thing is they do have a points program, which is like decaying over time. So it started with a higher multiple, I think, and it's going down. So if you are going to play the game with the staked Athena or ENA tokens, I think there is definitely some interesting meat on that bone, but there is other kind of externalities related to points that may affect the market as well. But it was encouraging to see, we're back to like 18-20% on PTs for staked USDE. That's always a great thing to see. It just powers so many interesting DeFi plays that you can do if you can go get
21%. Well, yeah, so that means yeah. We could hop over to Morpho and probably get some crazy rates based off of that. You know what? Let's take a quick trip over there. So there's so many things to talk about. I love this. Volume and volatility. We're getting less volatility, really. It's like upwards volatility. Pretty consistent price action, which I love. Once the markets are directional, things get a lot of fun. However, the caveat here is once things get directional and clearly directional, we can see outsized returns on CPVs. And this is something that you were sort of getting warnings about pretty early on. Now, while I pull up Morpho, do you want to give your pitch on your warning signs here?
Yeah, there's been a few of these counterparty vaults, like a lot of popularized by GMX from last cycle. These vaults where people are, depositing, could be just stable coins, could be majors like BTC, ETH, and Sol. And then leverage traders are borrowing those to go long and short a different asset. So they've been very popular. They've been very profitable during this kind of like downward crabbishness because traders were losing. I'm thinking of things like, GMX V2, like the Drift CPV that they have, like JLP from Jupiter, obviously, those are the big ones. And so they've been printing and people have been very comfortable with the gains that are in them. But if we do really go into an up-only market, like we've seen previously, they tend to start losing, right? Like traders tend to be very long. And when we see days like the last week where people are winning and winning and winning because BTC is up, such large amounts on a day, it can definitely be dangerous to be in that. I will say there have been some tweaks that have been made in terms of like borrow costs for those, different CPVs. They are trying to get more and more protected. That being said, we did see the GM assets on GMX, take some losses. We did see the Drift vault take some losses. Luckily, we haven't seen it on Jupiter and JLP yet, but it's a real risk. And if you have a lot of exposure to that stuff, do think about the risks of being in that kind of asset in these market conditions. I've heard this thing getting thrown around where it's like JLP is better than holding stable coins, right? And I think in some ways it is. It's performed super well. And I kind of do like the idea of holding a basket that's earning yield and appreciating in value over time instead of just holding stables in these kind of conditions. But you have to realize that it's not just the same as holding stable coins. You're taking the other side of the trade. If the traders start winning, then you start losing. And so, there's quite a bit of nuance that needs to go in there for people to really understand the risk that they're taking on in this type of market condition, being in a counterparty vault.
Were there any, here we go. Yeah, you sent me this as one example of this is the Drift pool. I think Drift has a CPV as well. No, this is Drift's Delta Neutral JLP vault. So now they have a big loss because of people who had JLP outperforming.
Yeah, Yeah. So
or
we're
people
seeing,
on Jupiter outperforming, I guess, rather, is the case. And also, this happened on GMX. So the GMX GM positions, which I had been told kind of were principal protected, they weren't actually principal protected. So what they were is they hadn't had principal losses in their entire history because of like how the new mechanism worked. But because of the ridiculously outsized gains on the long positions over the past week, they did lose some principal. So that was disheartening to see, I guess. Some of my favorite positions, like the leveraged GM BTC and GM ETH on Dolomite, might have experienced some liquidation, which hurts. It's a big bummer. And like JLP leverage probably saw the same thing. We can actually look at JLP if we wanted to. But yeah, basic idea is you are the counterparty to traders. When traders win, your counterparty vault token asset, JLP, GLP, GDAI, they still have that. GM, BTC, GM ETH, those things can go down in value. We saw extreme cases of this with Levana back in Cosmos, maybe a year ago. But this is another, this is a recurring thing. So when the markets are super directional and obviously directional, people can get wrecked, especially when they're directional bullish, because crypto in general, DeFi in general, has a bullish bias already.
On the other hand, though, of course, JLP did break $4, which I think is an all-time high for the asset. So,
But is it breaking because of price action from Solana?
Yeah, I think so.
Like, can we do?
No, it's kind of this. It's kind of like the siren song, right? Like these things like do well. They're exciting because they're high APR. They've got a lot of fees being directed to them from traders and stuff like that. But there is real risks, and so I'm not trying to be overly negative on them. I just think that people sometimes underappreciate how risky these things can be in terms of like absorbing losses during very bullish periods. Yeah,
I mean, the really interesting thing to me is that Solana is nearly at all-time high, right? It's almost back at its all-time high. Or did it break its old all-time high?
No, it's still 20 or 30% away from the all-time high.
Okay, so 30% away, but definitely it wasn't at its all-time high back in 23 of May. So it's for this cycle, it's hitting consistent all-time highs. It's last cycle all-time high, maybe a little bit higher. But even though Solana is hitting its cycle all-time highs, which means like in the past year, it's consistently going higher than it's been in the entire year, JLP has still outperformed Solana, holding spot Solana, even though it's more hedged against, we've talked about this so many times, but it's just such an interesting case. So like it is up 12% versus spot holding Solana over the past 174 days. And we've seen Solana rip. So I think that's really, really interesting and should be considered when you're deciding how you want to have long exposure to the Solana ecosystem. Now, I wanted to hop over to Hyper Liquid because they're going to have their airdrop eventually. No one knows when. No one really knows how many points there are. No one really knows anything. No one knows what percentage FTV they're going to drop. It's really hyped. People think it's going to be huge, and I want to get excited about it. So Hyper Liquid, as we've mentioned, has taken the crown from DYDX as the de facto perp dex on chain in DeFi. And that's been super impressive. They had their snapshot, I guess it was 2 days ago. Hopefully you guys all participated in that and claimed the hype that you are entitled to, and you'll get that soon. But I did a little bit of calculation based off of Masari's report, and let me show you guys what I'm seeing. So look at this. Look at my fancy calculator that I've made. I tried to step up my game.
This is it's a new world. This is like the calculator man wearing one of those tuxedo t-shirts, right? You gotta love it.
That's exactly right. Yeah, well, it's been fun just to play with the color schemes of the actual protocol. But then people in the DeFi dojo were like, it doesn't look like your old calculators. Make it look like them. So we'll see if I stick to it. It's fun, but maybe too time consuming. Anyways, there's whales market point valuation, but there's also this thing called L point. Now, for those of you who don't know, L point is a tokenized hyperliquid point that you can only buy or sell, as far as I know, on the Hyper PURR Telegram. And I ain't doing that. That's just not me. So people were saying it's way more accurate. This is the best way to get exposure to point buying and selling. And Whales has no volume. And okay, well, there's not much of a difference. There's a little bit of a difference. So on Whales, the point's going for roughly $11. It's probably maybe a little bit down today because the markets are down by 4%. Maybe I'm wrong. We can go check out Whales. No, Whales is still it's almost $12. on Hyper Telegram, it's like $15. So $15 would be nuts, by the way. If we had $15, that's crazy. And then the Hype token. So there's two things happening. There's the Hyper Liquid point valuation, which is going for $15 on Telegram. It's going for roughly $12 on Whales. And there's the Hype token valuation, which is kind of funny that the token is worth less than a point. You roughly get 4 tokens per point at this value, at this like dollar price point, whatever. It's going for like 380 on AVO. So again, if you guys don't know this, AVO and Hyperliquid, interestingly, both have pre-launch token trading. So you can go see what Hype is trading for. Going for still around 388, 390 on Hyperliquid. And so with those two valuations and Messari's assumed 51.1 million points, we can extrapolate that the airdrop value will be around, like, that's crazy, almost $800 million being airdropped. Now, that is absurd. That is absolutely absurd, in my opinion. So basically what that means is if they were to airdrop 5% of their FDV, then the implied FDV there would be 15 billion, which is probably not going to be the case. But people are expecting they're going to airdrop a huge chunk of their token supply. Some people were saying 50%. I think that's absurd. I think 15% would be huge. 15% would be more than normal. I think 10% is like a high airdrop percent of FDV. 15% would be blowing that out of the water. And then anything over 15% to me is an unreasonable expectation. But I hope I'm wrong. At 15%, that would value it at $5 billion implied FDV, which sounds crazy when you compare it to DYDX, which is, a tenth of that. It's like 500 million, with some caveats here. Messari was saying, well, DYDX might only be 500 million, but Hyperliquid is now number one, has way more volume, and it's launching its own chain. So I don't know how much you know about this chain, but I really hope that the multi-billion valuation estimate is correct.
I think it's a pretty bullish thing. I mean, just to be clear, DYDX is just under $1 billion FDV.
Oh, cool.
So I mean, like, I do think there's comparable stuff. I think GMX last cycle was like the perp darling, and that had some crazy multiples. I think that this is one of the most hyped tokens. It has this kind of lore,
pun intended,
not having a ton of VC investments, being this community project, big airdrop, good product. They have a lot going for them. I think that depending on how big this airdrop is, there might be some interesting buying opportunities. I'm probably a buyer of Hyperliquid under 3, maybe 2.5 billion. I think that's where I think it gets pretty interesting. And I'll probably set some, depending on how everything goes up, I'll probably send some stink bids in the order books around there. I said this before, but like on big airdrop days, there are times when you can buy tokens at some pretty wild valuations. Like we've seen this in the past where
I was going to say, what are some good examples? I know I kind of had that, but there were some ones before that. There was another modularity one, like one of the very first big modularity projects. Can't remember the name of it.
Maybe Dimension, but another one's Scroll. Scroll just happened recently, and I know people have been pretty bearish on like the token because it's had a bit of a disappointing price action. But like right now, if you're buying Scroll, and I believe it's something like, let me just check it, but it's something like a $600 million, market cap, which in some ways sounds pretty big. In other ways, is a third. Yeah, it's at 689. The last couple rounds that were done, whereas at 1.5 billion in the private rounds and 1.8 billion in OTC. So, you're picking this thing up at like way less than like the VCs were buying it for. Now, does that mean that Scroll is going to like recover and come back? I don't, who knows? But it is an example of like, an overvaluation probably in the private markets and being able to buy with no lockup at a much lower valuation. Because don't forget, the OTC buyers and the VCs who bought this thing at $1.5 billion are locked up for, I think it's like 3 years, or maybe it's 4 years actually. So, I think there are examples of this. Hyperliquid probably will be different because it is super hyped. That being said, if they really drop 15, 20% of the total supply, and there's people who've been farming this thing for a year now, or like months and months and months, right? And they have all this kind of like locked up capital, either in stuff they paid in like losses on trades funding rates that they've paid, or they just want to get some capital, go speculate on meme coins or speculate on BTC, or I don't know, whatever it is they want to speculate in. You know, if they're going to airdrop a ton, we will likely see quite a big dip in price, and it might be an interesting buying opportunity. You're looking at Arbitrum, is that right?
Yeah, because remember Arbitrum also kind of had this phenomena where like they launched, they went down pretty dramatically and they shot up. They went back down. I mean, they incentivized really heavily, and who knows. And also the bear market came around. But I remember like they were one of these, you could call this like a V-shaped recovery where it went down and then back up. Hopefully that happens. I've said that airdrops are kind of like a second seed round with no walk. So basically there's a liquidity flush, distribution. Everyone gets their tokens. A lot of people are just going to realize that they're just going to dump it. They don't really care. They just want to make money, and good for them. And so what happens is all of these tokens now get pushed onto the market, and people have this sort of second chance to purchase at what is probably a situation where there's way more selling than is organic. And so they can pick those up. And then after all that selling is done, we'll start to see actual organic price action after the distribution phase. And it, oftentimes these things go up. So it's, two things are happening. Airdrop farmers, they're happy, they can sell. And then people who are looking to invest in Hyperliquid long-term, because it is the largest perp dex on chain, it's going to have its own chain, have this sort of opportunity to buy at what is probably going to be a undervaluation. But we'll see. I mean, unless Hyperliquid decides out of nowhere to start like hyperinflating incentives, which I can't imagine they're doing. We see some perp dexes do this. DYDX, I wouldn't say they're hyperinflationary, but like they incentivize trading with their token. Hyperliquid will probably do this. They'll probably also do some stuff on their chain, but it's likely not going to be like, an ohm fork with thousands of percents of APR.
It'll be interesting to see how much of a drop off there is in open interest and TVL and activity on Hyperliquid. Like obviously people have been farming this super aggressively to get this airdrop. Like there are people who are just wash trading and doing all sorts of stuff on Hyperliquid to get this. So I think we're going to see a drop off. I do think it's genuinely though a good product, and I haven't seen like another product that's kind of out there trying to compete. Like Antonio, their founder, came back and he's saying that they're going to go and compete with Hyperliquid again and get their spot as like the king. Who knows if that happens? But I would expect Hyperliquid does need to do some sort of incentivization to keep people interested and keep people on the platform. But I do think, generally good product. They also make money hand over fists, like platforms, whether it be a SEX or a DEX, really do make quite a bit of money. And so if they, under this new regulatory regime can start directing that to the token holders by staking or something else, could be pretty bullish, right? So, as I said, I'm looking at, maybe 2.5-3 billion. I think that's kind of an interesting place to like get into Hyperliquid. Above that, probably not. Though I do think that this could be a token that does super well. It's got all the right people talking about it. It's certainly like the in vogue subject and could easily be one of the darlings of this cycle. And if we continue to be bullish, I could see this token performing quite well.
Yeah, absolutely. Definitely. The last thing I'll say on this is that for all the naysayers on whales, 24-hour volume of $200,000 is not bad. It's a pretty decent volume for whales market. Maybe the Telegram bot trading has like $1 million of volume. I don't know. I can't verify that, or I could. I just don't want to because it's a bit of a hassle. But look here, like you could literally right now sell 520 of these tokens, which is $5,000 more or less. Yeah, that's right. Yeah, $5,000 at $10.73. That's pretty good. And you can also buy just a ridiculous amount depending on how much you're willing to spend. So I think it's a decent place to go. Speculate on points. Still, we'll see. I mean, really, Hyperliquid could do some wonky stuff with the airdrop and say, you know what? If you were trading in October, you get 2 times the amount of. They could do weird things that really screw over the point speculators. And so that's one of the many downsides on point speculating, point buying. We've seen a few cases of people get burnt on this, even on whales. And so, do tread with caution there. Oftentimes if that happens, they'll just like dissolve the point market and then everyone gets their collateral back and everyone's mad. But hopefully that's not the case. I just want to warn you guys that is possible. Now, let's actually talk a little bit about Pendle. So you brought this up that Pendle is seeing some really good rates here. We were looking at, I was going to look at APRs. Did we look at APRs? I was doing APR math while you were talking.
I don't think you actually told us what you found.
I didn't. So LTV on the PTSUSDEs is 91.5% on both the markets. The December one, I think the other one's March. Borrow cost for the December one, 15.24. Collateral yield, 21.63. Now, of course, slippage and swap fees, all of those things do affect the actual APR here. So we're kind of doing a bit of moon math. Do take this with a grain of salt. But if pure numbers, purely mathematically, that's a 90% yield on your stables for the next month and some change, which is great. I mean, that's like a number of percents ROI. I think if we just took this and divided that by 12, that's a 7% ROI by expiry. That's crazy good. 7% on stables in a 1 month. Super awesome. Love to see it. And also, what you'll see is that the borrow cost, or the cost to borrow against PTs, tends to go down as you get closer to expiry because the opportunity cost is high. People don't want to leverage in so late in the game because they're going to have to leverage out too. They don't want to eat that cost. So you can get really nice borrow rates later on. Also, I think this week we're supposed to see an increase in the borrow caps on Morpho for these two markets, which means we should see other sort of tailwinds on decreasing these two borrow cost rates for the Morpho PT USDE SUSDE assets. Hopefully that's true. I know there was like a governance proposal on Morpho. I don't know if you're following this specific one, but hopefully we see that.
I think there's going to be a few, and it's for the market that's below that, I believe, the March 27, 2025 one. I think that's going to start getting a lot more liquidity injected into it. I think is it 100 million that I think is supposed to be coming into it relatively soon? And then something
it's going up to 250 million. So yeah, so like 150 additional million, which is huge. That should...
and then another chunk after that. Yeah, they're doing it incrementally. So like,
so they were both. See, I thought it was like they were going to increase the December one to 200 million and the March one to 250 million. But maybe you're saying they're going to increase it to 200 million first and then to 250 million. That's probably accurate. I just likely misread it.
Yeah, I think that's my understanding of what it is. It's the focus is on the March one rather than the December one. We're getting pretty close to
which makes sense.
It's like what 40 odd days away. So I don't think that's getting as much priority now.
I saw this when I was checking this earlier. I mean, so maybe it's because target utilization is so low, but this looks like it's exciting. Granted, there's only 77 cents borrowed here, and the kink rate is actually, it's not bad, but of course, like every day it doubles or whatever. Just for fun, right? If I was to do math on this, PT, Corn, Sol, BTC, I'm going to guess this is around 6%, but let's get the actual number here. Only $1 million of liquidity, but I love doing moon math. Let's do BTC. That's Sol BTC, Sol BTC Corn. Yeah, I was right. Look, 6.14. I've been in DeFi way too long. Okay, 30 bips, whatever. 6.14. LTV, I didn't see the LTV. LTV here is 91.5. Yeah. So this is a Bitcoin yield on a PT that is currently getting 69% APR. Again, the caveat being almost no liquidity. There's like $1 million of liquidity. But if they're incentivized to keep this up, it could be fun. So keep that in mind. And there's a lot of fun places to go, like do leverage and trade and do this and that. Just be mindful of a few major things. Like one, most leveraging platforms now have fees. Contango was fee-free for a long time. Love Contango, but fees are fees. They are painful, and they change the calculus of how you enter and exit positions and whether or not it's going to be worth it. Same thing with slippage. Price impact. You don't want to go max leverage long or max leverage on a chain that has low liquidity because you can just eat price impact that can destroy your ROI. So, definitely consider what your price impact is going to be, what the slippage is going to be, what the fees are going to be, how those are going to affect your overall yield and APR before entering and exiting these positions. If you can take out your own flash loans because you're a really savvy trader, totally changes the calculus, especially if you have like a fee waiver. Otherwise, take a deep breath, do some math before entering and exiting.
Yeah, one thing I will say about this market is, Solve has been, amazingly successful at sourcing liquidity for stuff. Like they've just shot up in TVL in a pretty amazing degree. So I wouldn't be surprised if some liquidity does come in. They've like lined stuff up for that Morpho market and it grows. But yeah, $1 million of borrow side liquidity is pretty low, and the demand I'm sure will be higher than that. So the rates will go up. But this is an asset that has over $100 million of liquidity here. I wouldn't be surprised if we see a couple tens of millions on that Morpho market.
Speaking of, while we're here on Pendle, you were mentioning this to me, which is Pendle is going to launch Boros. You might be familiar with Ouroboros, but it comes from the Greek word to eat. And I think it's because it's going to like eat all of the yield or something like that. You were explaining this to me, and I should read the Medium article, but it's effectively a place where you can speculate on things like funding rate. It's also somewhere where you can do yield trading with margin.
Yeah. I think it's going to be really interesting to see how all this works out. We don't have like a ton of details on the specifics. So of course, when we get that, we'll be able to like dive in to a much larger degree. But yeah, they are trying to essentially like, take this other source of yield, which, there have not been a lot of derivatives. I guess Athena is kind of like the biggest derivative that plays with funding rates, right? Doing that arbitrage between holding spot and then like shorting perps. We haven't seen too many other products at size which have been able to, play around with funding rates. Funding rates, of course, are a massive source of revenue, right? Like sexes and people who are trading on them, market makers, make a ton of money off of like funding rates and just generally how long people can be. I do think it's going to be super interesting, right? Like, for example, you could get a fixed rate funding rate for a certain asset for a certain period of time, right? Like that would be a pretty fantastic thing if like during the bear market, you want to be long ETH and you want to lock in, say like a 5% funding rate for ETH for some fixed amount of time. Like that could be super duper exciting, right? Or during a bull market, doing the opposite, like locking in like the other side of that, someone paying you some super high funding rate. I don't 100% exactly understand how it's all going to work, but I do think that like Pendle has proven this amazing track record of being able to come up with new primitives that have really like shifted the game in DeFi and also to be able to like really ship. So yeah, they're, launching Boros. Previously it was called Pendle V3. So like, don't get confused that this is like some completely new thing. I mean, I guess it is. It's going to be its own protocol. It's going to have its own name, but it's essentially just Pendle V3. They're not going to have their own token. So like it is, I think, pretty bullish for people who are holding the Pendle token because there's whole new primitive, whole new kind of like set of markets that are being unlocked around it. So I'm bullish Pendle. The other big thing that's kind of like bullish for Pendle as well is they've collected all of these fees. So if you scroll down in this Medium article a little bit, they've collected something like $4.5 million of fees right here. So there's like a ton of EtherFi, there's a ton of Igan, there's a ton of Res, Puffer, Cook, all these different assets. I think if you price them as of yesterday, roughly, it's about $4.5 million that they're going to be airdropping. So that's very interesting. Another interesting thing is they are excluding liquid lockers. So there's a lot of liquid lock versions of Pendle, and for some reason they have decided to exclude those people from the airdrop, which means that your normal kind of VE Pendle stakers are going to eat pretty well. I've seen estimates can be about 7% ROI. And I think that the snapshot is going to be at the end of December. So if you are interested in getting this, you do need to go and lock up your Pendle. I think, it's a VE system. So the longer you lock, the more like share you have. I personally am not a big fan of locking tokens. So I will not be participating in this personally, although I am holding Pendle and I do hope that, there could be a lot of kind of positive price action around the excitement around this new product, around this big airdrop, around all these different things going on. So yeah, Pendle shipping as ever. It's great to see airdrops and new products.
Yes, for sure. Pendle's had a bunch of like different narratives. It's gone up, it's gone down. And people were like, oh no, point season's over. No one's excited. And now we're finally seeing why it went up in the first place, which was people knew that Pendle was taking like 3% of all the points. Well, here they are. Right here is that big cachet of like airdrops, and now finally, the chicken has come home to roost. Is that right? You think a rooster would roost, and VE Pendle holders will be rewarded. 7% ROI is outstanding. Is amazing. One yield that
I just real quick thing before we jump over to that is Pendle is so ingrained in DeFi now that it's actually like the third biggest DEX. There's some people talking about this on Twitter yesterday. So if you look at like the list of DEXs, because there's so much yield trading happening, like if you count by volume, I think that they are like the second biggest DEX, which is pretty crazy, and just shows like how ingrained all these things like PT assets and YT assets and all this different stuff are. Like there's clearly a demand for PT assets and these fixed yields. I just hope that we can continue to have demand for the speculative side. There's been so many YT holders that have been burned for such long periods of times that like, you know, those folks need a little bit of hopium to kind of power this whole side of things, or people want to buy the yield or they want to buy the points or whatever it is.
Yeah, that is wild, considering it's not intended to be a DEX. Like you can't go over there and just trade whatever tokens you want. It's not really routing the orders through it particularly. It's just for yield trading. Though we talked to Tien a long time ago, and he was explaining his vision for Pendle. I think this was even before Pendle V2. And he was saying, you know, yield trading or trading interest rate swaps, I think was a phrase he used, is one of the biggest markets in TradFi. And it will come to DeFi eventually, and they want to be the first ones to do it. And I loved his ambition, but I was kind of like, didn't really fully believe him. And now, I mean, it is, as you said, the third biggest DEX in DeFi, which is wild, and certainly one of the largest protocols. So good for them. Now, one thing I wanted to show you guys is that Wrapped EtherFi ETH still kind of kicking butt. Like this has been a play that has been available since April of this year. So over half a year. And in my opinion, has been the single most consistent LRT play in all of DeFi. It's been the one that a lot of the whales that we speak to and work with are like still in. They haven't touched their position. In fact, they consistently try to increase their position. And just like the quick math here, right? So I was doing math in this. This is Wrapped EtherFi ETH. It has like an intrinsic yield of over 50%, especially when you have a lot of volume on Ethereum chain, plus like another 1 point whatever. We can look here. So 4.4 total APR there. Plus there might be some additional yield from season 4, probably between 1 to 2%. I was saying 1% earlier just to be a little more bearish. So this play, right? This play is generating, without considering season 4 at all, 29% APR on your ETH, which to me is just, it's exactly what I'm looking for. It's a 30% APR. It's on Aave, so I'm not worried about smart contract risks. It's using EtherFi. I am totally confident in EtherFi. They're the largest LRT protocol out there. So I love the risk profile of this. I love the yield. And there is these two additional things that we're not really accounting for, which is one, season 4. So I've added 1% for season 4. That puts it up to 43% APR. And then 2, there's also AVS airdrops. There's the LRT squared airdrop. There's all of these unknown things that could boost this even higher. And again, for the risk profile of EtherFi and Aave and just tons of size, it has really been an incredible play. It's arguably my favorite play of this cycle. In terms of like longevity, I've had a lot more fun, spicy plays that I've made crazy returns on. But in terms of like kind of a boring set in for get a great yield, this has been maybe number one.
Yeah, I mean, I'm a huge fan of this play. I've had probably like 60% of my ETH sitting in this for months and months and months. You know, sometimes I moved over a little bit to Scroll a few months ago. That turned out to be a fantastic play, but it was kind of like the same thing, but just with like an additional boost on top. But yeah, I mean, with programmatic rewards and being able to collect your Igan on a weekly basis and having the value of the asset going up, having a pretty robust and tight peg, it's a great play. I do think, it's going to be interesting to see how things play out. Like Igan has been seriously lagging. Like ETH has been performing super well. Igan's been kind of down only. That's because a lot of these LRT protocols are just like on a weekly basis dumping large clips of Igan into the market. And I think it's a hard thing for, the market to digest. It'll be interesting to see. Like, I do think that Igan really is, one of the darlings of like this cycle. Hopefully, I'm definitely long Igan. But if it keeps on trending down relative to ETH, then, maybe the APR will drag a little bit. On the other hand, you could be farming it now and then it could spike up and have a lot of like positive price appreciation, and that could make the APR even higher. So I'm in this play. I've been in it for a long time. I haven't moved. I am interested in some of these like compound incentive programs that I hear you're going to be coming out soon. And so like that might be a reason to check out other money markets like Compound, for example. But chilling on Aave with, that position for long periods of time has been very profitable. And I sleep it well at night, just knowing kind of like the risk profile of it.
We were looking at the will Bitcoin hit 100K by the end of the year? I can't find this market. Oh, here we go. Okay.
One
100K
right
by
there?
2024. Yeah. $3.1 million of volume. Excellent. So we were talking about this because it presents a really interesting play. I mean, strategy. It's not like an arbitrage really. It's more like it's a fun way to hedge that I think is maybe really efficient. And so I want to talk about the math here. Now there's one edge case that could kind of blow this math out, and I want to mention that as well. But currently, you can purchase No for 47 cents, and that's going to have like roughly 110% return. I can quickly show you the math here. So if it is 56%? 56, yeah. So that's cool that there's a 56% bias towards it. So an ROI of 127% if it doesn't tap 100K by 2025, or so in 2024, and BTC price is roughly 85,000, 85,000 right now. And so you'd want to, so the strategy that I was theorizing, where effectively your principal protected, it's almost like a delta neutral. It's almost like a, what's that option play? Like a strangle, where like you're not losing money in the middle and then you make money outside. It's like a hedged strangle, or maybe I'm getting those wrong. But the play here is to take half the difference between the spot and strike. So strike is 100K. So half the difference would be 7.5, right? So you'd want to short like $7,500. And now when you look at this, you'll see like there is no negative ROI in dollar terms between 77,000 and 110,000. Like anything above this, you make money. Anything below, down to I think like 75,000 BTC, you make money. So this has been a really, really fun idea for me, just because it illustrates what Polymarket can do. And granted, you probably can't invest in size here. I bet like a $7,500 purchase might move the market. It moves it a little bit. It's not too much, but you go from like 120% ROI to 106% ROI. So there is a difference. Nevertheless, like you can see here, this is like the Bitcoin price change. So if Bitcoin price went down 5%, you would make 5% ROI on your principal. So your principal is like $92,000. Your overall would be 97,380. So you would make like $5,000. You'd make almost $5,000 if BTC went down 5%. So way better than spot holding, and you can sort of see the difference here. So it's amazingly better anything under that strike, right? Obviously, and then over that strike, it is worse. So it's really what it is. It's a fun way to like lock in the price with hedging in both directions. And again, the main point of illustration here is that it's just this new thing that we can do with new derivatives, and it is cool.
Yeah, and imagine opening this trade and then it just going up to what you have there at $98,500 and just chilling and never quite getting to 100K. That would be fun, right?
Yeah, because then you have you took your initial principal of 92,500 and you turned it into $119,000, which would be fantastic, instead of holding Bitcoin spot, which would only have gotten you like 98,000. So yeah, it's really cool. I like it. Just wanted to show you guys that fun math. And there are like more micro market versions of this, but of course, like the smaller the market, the smaller the time frame, the less volume and liquidity is going to be, and so the more impact you're going to have with your trade, and so the less you can really hedge or do anything fun with it. All right, guys, that's just about. Go ahead.
Oh, I was just going to say, last piece is like, I do trade a little bit on Polymarket, mainly just because I think there could be an airdrop. Like I think that's like the narrative, right? Is like, how are they going to keep attention? Well, they probably have to pay for liquidity or keep people's interest in some way. So I have a bunch of different wallets that are like open on Polymarket, betting on small random stuff, providing a little bit of like liquidity and doing different things. But I've never really used it at size. So I guess that was my just like final question for you. There are all these like interesting different plays out there. Like, are you kind of just playing around on it on a small scale, or have you ever taken any kind of like large scale position on Polymarket?
No, I mean, like I've done nothing on Polymarket because, and this is kind of embarrassing, but it's because it's on Polygon, and I am just allergic to Polygon. I don't like bridging over there. I don't like using it. I have a lot of PTSD from like 2020, where my transactions would always get stuck and frozen. And so at one point I just gave up on Polygon altogether and just never went back, never had an excuse to use it. I know it's like done things, gains, and G-Trade was one of the things that almost brought me back over there. But I have just refused to use it ever since because of the bad user experience. I know it's like got a whole bunch of tailwinds and a bunch of institutional investment and partnerships. But yeah, that is, and I think you can even deposit from like almost any, so you can deposit directly from a SEX, I think. So really I have no excuse not to use it. But yeah, I mean, it feels like, when it feels like gambling, it's not really interesting to me. When it feels like hedging, that kind of gets my blood going. So like I just saw this November, this has decent volume. You could bet that it doesn't hit. I mean, look at this, 59% chance that in November it hits 95,000. That seems really good. So if you like took the hedge here and 60%, it's almost like the same thing. This is a 1 month return. If you said no, it just seems really good. It seems like, I mean, look at that chart, beautiful chart. Yeah, no, but I have not used it.
That makes me even more bullish for the airdrop. Because
because I'm not doing it.
Classic thing for Steven to talk about a product but not use it, and then
it just has a crazy airdrop. Yeah,
me to syllable it and then get a big airdrop. So that makes me super bullish. Everyone go out there, trade on Poly Market so we can get the airdrop that Steven won't.
All right, guys, thank you so much for listening. As always, if you want to talk about these strategies or protocols or alpha in real time, go ahead and join the DeFi Dojo Discord, link in the description probably, and have a wonderful rest of your day.